please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, good afternoon. Welcome to Halftime Report. I'm Sumaira Abdi and with me is Nigel D'Souza. And before we get started from Nigel and myself, we wish you a Merry Christmas and we hope you enjoy the long weekend.
Absolutely. We're looking forward to the long weekend, Sumaira, but we've got a few hours of trade, so we'll focus on the markets for the bit. Well, early morning, all of us chose to wear red, but the color's been green because we almost hit fresh all-time highs. From the top, though, we have come off a tad bit, but no real complaints. We're at around 10,480 approximately. The mid-cap index continues to make record highs, and the breadth of the market as well looking quite good. The Hang Seng, if you take a look at it from the Asian markets, well, that's up close to around 100 points approximately, while the Shanghai market is as flat as can be. So we're doing quite well, even if you compare us with the rest of those Asian markets we're holding with good gains. First,
it's time now for movers and shakers, and there are quite a few buzzers today, so let's get started. Reliance Infra, the stock is up 5%. It's seeing 3.5 times the kind of volumes it normally sees, and it's gained about 18% this week. Anisha is tracking that big one. Anisha.
Oh, well, yes. Yesterday, the deal got announced in terms of the consummation of the initial deal that we had heard back in October, that the company is getting into exclusive talks with Adani to sell off its Mumbai distribution business. And yesterday, we heard that the deal got culminated. Now, the total transaction value of this particular deal is 18,000 odd crores. They get initially around 15,000 crores, and then later a part of it for the working capital and regulatory assets as well. Now, as we have been mentioning earlier as well, this takes away around 30% of the revenue for Reliance Infrastructure, but the good part is that the debt will come off as well. The management was telling us that this will make the company debt-free and in fact add around 3,000 crores to the cash surplus. So that comes as a positive, and even for Adani Transmission, the deal is good because it is very fairly priced, even if you look at the regulated assets and liabilities that they have. And more importantly, this marks their foray into the distribution side of the business. So we know Adani Transmission has been working in the transmission space, but it will be the first time that the company now enters into a distribution space, and this makes them the integrated provider because they were already in generation and transmission. So this just fills in the puzzle that they had. So overall, things are looking good for both the companies. Bigger positive, of course, for Reliance Infrastructure with the debt coming down. Back to you.
All right, Anisha, thanks very much for that. Let's also hear out the management on that note.
We have stated our intent of being very lightly levered and also to focus on low capital intensity projects. So our next big focus areas are the construction business. So the Bangladesh project, our role is the role of a construction company, which we have won on international competitive bidding basis. So we focus on construction and low capital intensity defense business. So these are the future growth areas for Reliance Infrastructure. EPC will be one of the key businesses, and defense. Our total revenue today is in the range of 27,000 crores. So with this, about 30% of revenue goes down. So we expect that the full effect of this should come in Q1 of next year. Then the loss of revenue from Bombay distribution will be made up through construction business over the next couple of years.
Another big mover from the broader markets is ultramarine and pigments locked in an upper circuit. And Nigel, I think this had featured on your midcap mania in sometime in 2016, am I right?
That's right. You know, Sumaira, it did feature at that point of time, and that was the same reason. You know, at that point of time, I had picked it because the promoters were increasing stake. But the reason why the stock is up today is because, in fact, yesterday, the promoters, they have increased stake. They bought close to around 2 lakh shares yesterday at a price of around 295 rupees per share on the BSE, and the stock in fact has soared up. Remember, what does ultramarine do? Well, they manufacture pigments as well as surfactants, and they have been gradually increasing stake. Just take a look at that. They paused actually sometime during last year, and now they've gone ahead and increased stake as yet. They are part of the Tirumolai group, and that's in fact the entity that bought the stake yesterday. They have virtually no debt. They have 20% stake in Tirumolai as well. The street seems to be liking that. Remember, we were highlighting it on the channel at around 145, telling you that yes, the promoter was increasing stake. Yesterday, the stock was at around 295, and the promoter, after the stock doubling, has gone ahead and increased stake. And the street likes, but in fact, the promoter goes ahead and shows confidence in the company, and that explains why it's locked in upper circuit.
All right, a big mover today and this week is Aarti Industries. Ronit, the buyback coming?
Yes, Sumit, as you said, the board approved a buyback of around 8.2 lakh shares yesterday. So what this does, the buyback is around 1,200 rupees versus the market price around 1,060 right now. So what this does is it's a 1% of the equity, and the promoters as well as going to participate in it. So it'll be important to see the acceptance ratio. Moving on, in 2016, October, they bought back around 12 lakh shares at 800 rupees. So another buyback coming in almost 1 year. Moving on, Aarti Industries also derives more than 50% of the revenues from exports into almost 60 countries. Moving on, also the management has guided for 20% growth in their top line as well as bottom line through deal bottlenecking of their facilities. And finally, the company also said they're planning to incur a capex of around 9 billion to 10 billion in FY18 as well as FY19. So on the back of this, you can see a green on the stock today.
Okay, all right. Thanks so much for that, Ronit. Well, Dilip Bilkon, in fact, is buzzing in trade after the company announced an order win worth nearly around 520 crores. We spoke with Mr. Jain, the CEO of the company. He says they expect a 12 to around 15% growth in the top line in FY19. Let's listen in.
Our order book is right now the 15,000 crore, and we won around 500 crore order yesterday by the IRCON. And the total order book is now around 15,500 crore. Margins online and around the total top line will be around 7,000 crore in this year, up to end of the full year. We are expecting around 15% growth in FY19 in our top line.
And transformers and rectifiers, that's another buzzing stock, up 3% today. Jitendra Mamtora, the chairman of the company, spoke with us this morning, and he says that he expects Q4 to be exceptionally good given the execution of the export orders.
As on today, the total order book is 900 crores plus, and there are some more orders which are coming. Not directly from PGCIL, but from the EPC contractors who have quoted with our prices and where they are L1. So we are expecting another 80 to 100 crore order before the end of January. Second half is going to be definitely better than the first half. Third and the fourth quarter. Fourth quarter is going to be exceptionally good because there are export orders which we are going to execute in the fourth quarter. Including the order from Russia. Last year we did not 800 crores. In fact, if you excluding excise, it was something like 710 crores or something like that. This year will be crossing 800 crores. Margin-wise will be, if not more, anywhere between 10 and 11.
Well, PVR has had a good week. In fact, it's higher in trade today as well as Tiger Zinda Hai hits cinema halls today. We spoke with the management earlier today, and what they say is that in fact the movie will help occupy nearly around 75% of the capacity in the first 3 days.
We've sold roughly 25% of the capacity that we've allocated to Tiger Zinda Hai. 25% of the first 3 days has already been sold. And considering that most releases, including Tiger Zinda Hai these days, come with a saturated release plan, as in they tend to go out with large number of screens, large number of shows. Tiger Zinda Hai in the first 3 days would easily do somewhere around 75% occupancy. And then thereafter the weekdays would depend on, the kind of word of mouth it generates, the kind of leg it shows at the box office.
Okay, here's a quick recap of all the buzzing stocks that we just covered. Adani Transmission, Reliance Infra, Ultramarine and Pigments. In fact, that's in focus as well. Aarti Industries, Dilip Bilkon, and Transformers and Rectifiers. Add to that, a PVR. To our special segment, the outperformers of 2017. We will be getting you companies that have been star performers in 2017. Yuken India, that's one such company. Remember, the stock is up. Not 100, not 200, not 500. 680% in this year. The key aspects that we're going to be focusing on. What's the update on the monetization of the land at Whitefield? What's the utilization of these funds going to be used from? And also, how does the business scale up from here? What does FY20 look like in terms of revenue and margins? And will either of the promoters really go ahead and increase stake in the company? To understand that and more, we're currently joined by Mr. C.P. Rangachar, the MD of Yuken India, who joins us on the show. Hi, Mr. Rangachar. Thanks so much, sir, for joining in today. Well, the street has been very, very excited, just looking at the stock price, about this 6-acre JV with Brigade. What's the quantum and when is revenue from this monetization of land at Whitefield expected?
Okay, it's a joint development project with the Brigade. It will be launched by March of next year. The plans have gone for approval. We expect to get about 160 crores over a space of 3 years starting from the launch.
Hi, sir. Thanks much for speaking with us. Just wanted to clarify, you said 160 crores over the next 3 years. I mean, can there be any variation in this revenue?
Depends on the prices at which the property is sold, but we expect that by that time the prices should be fairly good. But the demand in that area is very good.
Okay, Mr. Rangachar, you will be getting this money. More importantly, how will you use this money? What do these proceeds, how will the proceeds coming in from here, how will they be used, sir?
First, we'll use it to extinguish the debt, which is around 70 crores. Then another 30 crores will go towards expansion, which would enable us to double the capacity. And for the rest, it's up to the board to decide how to dispose of it.
Okay. Sir, you will have a balance of about 60 crores, which will be sitting in your books. So any possibility of a one-time dividend or perhaps a buyback, say, for your shareholders?
Yes, there will be money lying around, but as I said, it is a little too early to say because the money will come over a period of 3 years. And the first monies which come in would be used partly for investment and partly to extinguish the debt. And the surpluses would be in hand around the third year.
Okay, sir. So that's about that big JV that the street has been factoring in for the last couple of years or so. But let's talk about the core business. What's the revenue outlook for FY18? And post this proposed expansion that you're talking about, what kind of the revenues, will start flowing into the system, say, by FY21, FY22?
You see, as I mentioned, end of this year, there's FY18, it would be about 230 crores standalone and 280 crores as consolidated. And by end of 2022, it would be about 600 crores consolidated.
So you're talking about 300 crores of additional revenue on an investment of just 30 crores. Is that asset turn at what, say, 10 times?
Yes, you see, most of the infrastructure is already in place. So what we require now is marginal investment in the infrastructure, and the major investment will be in production capacity, so in productive machines. So that's what is going to yield the increase in this one. And this does not include the investment the subsidiary companies will make, because that will be out of their own funds. It won't come out of our money.
Okay, so you're telling us about the revenue projection, and that looks quite good. But what kind of margins are you looking at? Now you're looking at doubling your revenues as well from here. What will your margins look like?
Yeah, we should see around 13% by end of this year, and at least another 3 or 4% by increase by 2022.
So you're saying revenues could double, margins would expand, but is on the ground, you think demand really is that strong?
Yes. Everything depends, of course, on the GDP growth, but the indications are very, very strong. The current year has been good, and we believe that the demand is going to be there easily for us to meet these targets. These are targets which are easily available.
Well, sir, you're talking about 160 crores coming in from that land monetization. You're talking about doubling your revenues as well. And you're saying that demand is good as well on ground. Could you give us some clarity? Who are your clients?
The biggest sector for us is the machine tools, where we have all the largest players, the ACE Micromatic Group, BFW, LMW, Jyoti. They are all major customers of ours. Then in the plastics industry, we have ASBI, we have Toshiba, and we have a host of other companies. Then we have the steel sector, where all the major players, Tata, Jindal, SAIL, and all the equipment manufacturers are our good customers. And then we have the power sector, where we have BHEL, we have Boeing Forest, we have and a host of other companies who are very good customers of ours. So these are the main sectors. Then there is infrastructure, where we have JCB, we have Escorts, and many other companies.
Right. So which is the segment from where you get the bulk of your orders from?
Yeah, the sectors from which we get business in descending order are machine tool is the biggest, which would be about 30%, then plastic machinery, then the steel and power sector, then infrastructure, construction machinery, in that order.
Well, sir, final question before we let you go. Well, what started the huge interest in this stock? You know, that was the monetization of the land. Are there any such land parcels that you own in India that you can monetize? Is there something like that on the cards?
No. We do own, say, our properties in Bombay and Delhi, Calcutta, Hyderabad, and we have some more property in Bangalore itself, but they are not very large or very valuable properties, and that's really not our business. Our business is to make money in hydraulics.
All right, so thanks very much for joining in. Thanks for your time, and we wish you a great 2018. Happy New Year, Merry Christmas, and well, I think the management has also given a lot of very, very bullish comments for the coming year, Nigel.
Absolutely. You know, Sumera, I was trying to study the company at 1,000, at 2,000, at 3,000 rupees. Yeah. I'm glad we finally got the management, in fact, got to understand what's going on. So they are sounding bullish. I think the daily chart is not something you should look at. Just look at the last 1 year chart. It's been a big gainer. Management confident, doubling their revenues, talking about receiving proceeds of around 150, 160 crores. Let's see whether or not they can do it, and what they do with the surplus funds as well. That's something that the street will like to know. Well, let's slip into a short break. As we do that, let's get in a word coming in from Pradeep Shah of India Share Fund Advisors. He says there are enough reasons to be optimistic on equities, adds that the effects of demonetization and GST, they are behind us.
The economy is doing well now. The effects of demonetization and GST are over. The whole world economy is firing on all cylinders. The US, the Europe, Japan, China are all doing well. And we, even in the worst case, no one talks of growth less than 6%. So we are doing quite well, and therefore there is some reason for optimism for equities. The price levels can, of course, correct overall if there are triggers which are visible do take place. So that's something one has to be always careful about. There are interesting possibilities that emerge as new technology comes in. You've seen, and these stocks have run up. I'm not suggesting that, but see, for instance, smart meters, and now you see this kind of transmission story playing out with new or players endowed with capital coming into transmission and distribution. They will all need smart meters and so on. So you're seeing, for instance, run up in those stocks. Traditional sector, I think there may be value even in the pharmaceutical sector. It's been beaten down. It's as if the Western world will stop buying Indian products. I don't think that is the case. The Western world needs to contain its costs in Medicare and so on, and I think the Indian companies are very well positioned for that. The central government wants 24/7 power, but the states now don't always have the means to offer 24/7 power because they have subsidy programs. I think the ultimate problem that has to be addressed is the reduction of subsidies, whether it's in agricultural sector or in the urban poor sector. If at least cost recovery is done and cross subsidies avoided, and if the government insists on subsidies being transparent in the state budgets, I think we'll go a long way towards solving the power problem.